Welcome back to the Behind the Wealth Show. I'm your host, Roger Abel, back with Elias Randall. Elias, summer's coming to an end. This morning I took my kids to pre-school, so the day before school where they put all their supplies in their desk and meet their teachers. And I ran into a lot of parents there. There's a lot of parents who are excited for summer to be over. We're a little disappointed that summer's over. We had a good one. Did you take your kids to school today?
Yep. They went to the meet your teacher night, did the school supplies. It seems like the summer went by pretty quick.
I have a question. Did you order the school supplies or did you buy them?
Maddie takes them to the store so they can help picking out. But then we were looking at the pre-packaged thing, so we're going to do it next year.
Greatest business model ever. It is the greatest business model.
I actually think it's cheaper, too.
Yeah,
I think if you get the pre-bundle, it's less expensive than going to buy all that. That's what Maddie said. Anyway.
So we showed up today at school. All their supplies are sitting on their desk. The teacher had directions for how they needed to get everything organized. I'm like, because I don't order the school stuff. Megan's like, oh, yeah, we just ordered this bundle and they sent it all here. I'm like, this is awesome. And here's what I recognize, though. Nobody complained about the color of their 3-ring binder. Nobody complained about the color of their pencil box. Where if you would have taken your kids to the store to pick out all this stuff, how many hours would you spend trying to get the right color pencil box and the right color binder and the right color notebooks? No, we got green. Not a word was said. It was amazing.
Yeah, it's a giant waste of time.
Yeah, giant waste of time. And what a way to scale a business. Every single kid has to have it.
Yeah, there was, I think, probably half of the desk. I didn't know what those little boxes were when we first walked in, but then I started looking around, and that's what it was, pre-packaged everything that they need. So.
Yeah. So I have another great story, and it's kind of sometimes the best investments you make are the ones you didn't know you made and you forgot to get rid of. So we were at the lake this past weekend, last weekend there. And I was backing the boat up to pick up Megan, and she had a bag in her phone, and she flipped the phone into the boat on, like, the big cushions I have on the back, like the sun deck, and the phone hit the sun deck and bounced right into the lake.
No way.
Yeah. And Megan's scrambling around thinking it did, and I'm like, I saw it go in the lake. It's gone. So now it's kind of like chaos because, everybody thinks we have to have this phone attached to us all the time. And we figured it out. I called when we got home, I go, Megan, you're going to need to go to Verizon. It's probably going to be like 3 or 4 hours. And she goes, really? I go, yeah, it's what it takes to get a new phone. Like, it just is what it is. So she shows up to Verizon, and I get a call from a weird number. And it's Megan, because she doesn't have a phone. She's using the person at Verizon, their phone. She goes, hey, the good news is we had insurance on this phone. And because I told her, I'm like, we don't have insurance. You're just going to have to go buy a new phone, is what it is. Well, when you buy a phone now, they automatically add the insurance and you have to opt out, almost like a 401k, where a 401k, now you have to opt out. Well, I never opted out of the insurance. $250 instead of $1,000. That was a win for the Abel household. The best forgot about investment we've had in a long time.
What's the insurance premium?
I don't know. But it doesn't matter. It was less hassle. I told Megan, I said, so the other thing that happened, she didn't have to go through the people at Verizon. She now knows if you lose your phone or break it and you have insurance, you can just call this number and they send you on the next day. You can avoid all the hassle.
Oh, so, well, that's probably worth it then.
I told her, I said, then it's the convenience fee. It's not even the insurance. It's the convenience fee.
Yeah.
Like some things in life cost a little bit of money to have a convenience fee. And
I would like to know why it takes so long to buy a cell phone.
Well, Molly had the best answer. They got to get some add-ons. You might need some Beats by Dre. And you might need a fancy mouse and speakers. And
I think the worst buying experiences are cell phones and cars. You go to buy something and then you're there an entire day to buy one item.
You're just buying the cars at the wrong spot.
Probably.
I just show up and pick mine up and drop mine off. In fact, the last one got delivered. I never went to the dealership.
You're the big kahuna, so they do favors for you. I'm just a guy that works at Premier, so I have to get through. First I want to buy the car, and then I got to listen to them sell me the windshield stuff and the finance package, and the bug spray and whatever else. Premium air. I'm sure they tried to sell me premium air.
Well, so here's the deal. I looked into the windshield thing. I almost did that, but then I'm like, I don't keep these cars long enough to really have that work
the
out.
windshield stuff is great because then a lot of times you don't even need your wipers when it rains. But what they charge for
it's
it
like
is
$1,000, right?
Oh, I got so ripped off when I did.
You paid for it?
I
You
didn't,
bid.
dude. I didn't.
You bid.
No, I didn't mean to. It was like in a. What do you call it? It was like in a
Package.
An assumed close. Like the kid just said something and then like asked me, "Do you want it?" And I said no. And then he just asked me again, and I just said yes, so he would quit talking to me. I had no idea what it was, but basically I bought these 2 little napkins that you wipe on your windshield, and then the raindrops scatter.
And they're on like $1,000 for that napkin.
Oh, yeah. What I paid, they probably bought a 10-year supply to sell to other people.
That's hilarious. With that said, let's get rolling on the show. I got a couple of articles I want to talk about. The first one is Forbes had an article out there, and it was about, the title is 30 Too Late to Start Saving for Retirement. And before we did the show, I started thinking about what your response to this was going to be. And I'm pretty sure your response is going to be, it's never too late. The best day to start was yesterday, but if you didn't, it's today. And 30 really is probably the time most people really start to think about it, don't you think, Elias? Like before 30, I think people are just trying to figure out how to pay off their student loans that they have, get through college, and some of those other things.
Yeah, I don't think it's too late. I think it's hard, and it's hard to accomplish a lot of financial goals by the time you're 30, just because you haven't really been working that long. I mean, if you go to college, you probably start working when you're 22 or 23. Even if you started working, I guess if you started working at 18 without going to school, you could probably get a little more accomplished by 30. But no, I mean, if you save from 30 to 60, that's 30 years to save money. And I think, the nice thing about starting when you're really young is, like, if you start when you're 20, you can $100 a month can end up being $1 million between like 60 and 65. So that's great. But you should really save, you should really seek to save like a higher portion of your income over time anyway. So I don't think 30 is too late, but hopefully you can still have some of the habits to actually save some real money.
I think about, I was over at a neighbor's house the other night, and we were talking about, they're on, I call them serial entrepreneurs. They're always trying new stuff. And we were just talking about what I do, what they do, and how they save for retirement. But then also, he made a point. He said, part of the reason I'm doing this is I'm creating myself a pension. It's not reoccurring revenue, but it's like reoccurring repeat customers. And one of the things I think a lot of people don't think about is your money you're saving is really going to do one thing when you get older. It's really going to help you drive income. And one of the things I think people could think about, if you're concerned about you're behind on savings, is get the savings rate up, but then think either about a business you can start or a business you could be in or a job you can be in that could at some point become a pension for you. And his is not like in investments or insurance or any of that. It's in actually like a trades business. But I'm like, actually, you're right. You probably are creating a pension because you can keep working as much or as little as you want for as long as you're healthy enough and as long as you want to work.
Do they have employees, or does he do it by himself?
He has 2 employees.
So, yeah, so then he can still employ people and continue.
Yep. So that's just another way if people are kind of behind on the savings front, get your savings going. But, it's probably really important for a person who's 50. If you're 50 and way behind, I'd be thinking about how do I get my savings up, but at the same time, how do I start a business, get into an industry that I can work longer at my speed and not have to punch a clock from 8 to 5 and start to build this pension so I can overcome some of the hurdles that I'm going to have later in life.
Yeah, so I don't think 30's too late. That's probably, a lot of people actually, start saving meaningful amounts of money once they're in their young 30s.
Let's be
honest.
honest.
You've been in your career long enough where you can probably start making some real money and stuff like that too. So.
It's really easy for us to sit here and tell people, hey, you should start when you graduate college and you should do this and you should do that. The reality is that's not what happens. Life gets in the way, things get in the way, and when you're 22, 25, 28, saving for retirement is on complete back burner for you. You don't really care. Because it's so far away. So 30, not too late.
Yeah, and if you were focused on other stuff, like let's say you were paying off your student loans and saving up money to get into your first house, you can still, like doing that, you can still be in a good financial spot at age 30, and maybe you haven't been saving and investing, but you've done other things that are going to benefit you long term financially, so you can add that to it. So Wall Street Journal, they put out an article, and it's kind of interesting because you're talking about is 30 too late to get started, and the title of this was, "You think you're doing fine in life until you hear a friend is doing better." Man, that person's doing so much better than I am, and it makes people feel, this is really talking about kind of psychologically how it makes people feel, and then also talking about maybe ways to work through that. So let me ask you a question. When you watch a Facebook reel and you see someone that's got like the nicest boat you've ever seen, how does that make you feel about the boat you have? Like, does it make, oh, my boat's great, or does it make you feel like, oh man, I want something better?
I start shopping.
Right. So it was really.
That's a great tee up. It's 100% the truth. Like, you don't even know this stuff exists until you know it exists. And you're like, well, wait a minute. My buddy has that. I want that. Why can't I have that?
Right.
And it's exacerbated by social media. To be completely honest about it, the keeping up with the Joneses, the fear of missing out or fear of not being able to have something is 10x now versus what it was 20 years ago. I didn't know what my friend had unless they told me. And the friends who had nice stuff, guess what happens? They don't tell you.
Well, they don't. And the other thing is that typically what people are telling you is not all of the truth either. It's just like social media. People tend to inflate their own stories. And then on social media, like, and now reels are really popular, right? Okay, well, I guarantee you I can make a 60-second reel and put that out in the world, and people are going to think I'm one of the richest people, right? Like, if you go get the right suit, the right watch, and go, you can rent a sports car. Like, you don't have to go buy one. You could go rent a car for a day and make reels all day Friday, all day Saturday, and people are going to think, oh, man, this guy's balling. Well, maybe I actually don't have anything.
I think most of these videos out there that you see where people are in a beautiful house, they have a car, it's all rented. It's all rented stuff. They don't own any of this stuff. Was Ty Lopez, wasn't he a thing on like social media about how you read all these books and all these fancy cars? He didn't own any of the stuff?
Probably. And he probably didn't read all the books either.
He said he did.
See, there you go. I'm going to get a big bookcase and put it behind me. And then, hey, everyone, I've read
right
10,000 books in the last 4 years. Look at all these books I read. So I think what's important to remember, and this goes along with like that whole is 30 too late. I think when here's some realities of getting started in life. One, it's never going to be easy. And how many young people, and when I say young, I'm saying you're less than 25 and you're getting your first job, how many people are actually making what people would consider a lot of money when they're 25 and younger? How many?
Unless they started a business 5 years ago.
They're right.
None. Like, let's be honest. I don't even care if you're, well, number one, they can't be a doctor yet. They're not through med school. They're not through law school. So the only people who are just going to go out there and kill it within the first 4 years and make what we would consider a lot of money. And I think a lot of money is relevant to each individual person. What you consider a lot of money, what I consider a lot of money might be two different things. I mean, maybe if you get in sales, you could get in sales and knock it out of the park. But I'm going to venture to guess if you went and picked up an 8-to-5 job, you're not making what most people would consider a lot of money, which means you shouldn't have a lot of lifestyle.
When you're young, right?
Right.
There's sacrifices that you need to make. And one thing I thought was really insightful. So there's a couple in Indianapolis that they own. They're young, they're entrepreneurs. They started a couple yogurt shops in the Indianapolis area. So, and they were talking about how they had this aha moment in their business where they would be watching social media and we're in a recession and business is slow and it was making them negative. So then they kind of challenged themselves. We're going to not do any social media, focus on our business, and then talk to the other. So they joined the Chamber of Commerce, and then they would talk with other small business owners. And what they realized was even with all this noise, their business was still successful, but they were kind of almost blinded to the fact that they were running a successful business because they watch the media and the media is telling them how slow the economy is. So I think it was a good lesson. And instead of thinking about like all the reasons why you wouldn't have customers come into your yogurt shop, maybe just focus on running the yogurt shop and everything's going to work out. And it sounds like that they were able to do that.
So it's so interesting that you mentioned watching social media, thinking the world's coming to an end. We follow Josh Brown from the Compound, right?
Yeah, I love Josh Brown.
He put a post out on LinkedIn the other day. I thought this was amazing. Over the last 15 years, the U.S. economy has been in a recession for a total of 2 months, and that was during COVID. So that's 1% of the time. And he made a simple question. How many recession predictions have been made over the last 15 years?
Tens of thousands, I bet.
All for something that's happened 1% of the time in the last 15 years. How much wealth has been missed out on because people are on YouTube listening and getting pulled into this is going to happen, this is going to happen. We were supposed to have a recession the last 3 years. Will we have one? Maybe. I don't know.
We might, but
predicting is such a waste.
Recession, it is, and recessions are also normal in an economy, and they don't have to be super painful. I think it's a lot of recency bias because everyone remembers the financial crisis, right? So that's what the last taste of a recession was. And then in the post-pandemic recession, I don't even think it even registered for people because it wasn't that painful. But we can have economic slowdown and not have like a giant meltdown of everything that's going on. Economies are cyclical. In nature, they just are.
Okay, what was the Dow Jones Industrial beginning of 2022? All right, let's just go with the S&P 500.
At the beginning of 2022?
Yep, it was, let's just call it 4,600 points, 4,700, right? So I believe that's about the time that everybody started beating the drum that we're going to have this huge recession, all this stuff, right?
Right. The yield curve was inverted, and that's always a predictor of a recession.
The S&P's up 1,200 points or 30% roughly since that time. So if you got out and you sat on the sideline, you missed out on 30%. So if we have a 30% pullback in the market, we'd be back to where we were in 2022 roughly.
Which it's hard to.
Which you'd have been better off just being fully invested. There was no reason to try to time this thing.
Right. And for me, it's hard to figure out how we have a 30% decline when, like, even basically all the earnings are out of the public companies.
89% of the companies are outperforming their earnings. 89%.
Right. So they're all making money. So how are we going to, it's hard to understand how it's going to happen.
The average outperformance is 6%. It's not that they beat their earnings. They're beating them on average by 6%. 89% of the companies in the S&P 500. That was just released on, I don't know if you saw that, but Tom Lee just released that research last night. I was looking over that chart.
Well, and that doesn't mean, going forward, doesn't mean they're going to do the same thing next year or anything. No, there's no, like, predictor of success, but it's hard to say that the companies aren't healthy when they're still having these type of results.
I have a question. How many people do you think panic sold? People who
Too many.
People who don't have an advisor and they're doing this themselves, whether it was in their 401k or it was some other trading app. How many people do you think sold around August 5th?
I would say I don't know the
Well,
number.
do yourself. It's a lot. They panic sold,
A lot,
right?
yeah.
Because the market was down. It went from 5,600 points to 5,100 points in a total of 7 days.
Which is a lot for 7 days.
That's like almost. It's not quite 10%. Well, guess what? On July 22nd, the S&P 500 was 5,564 points. Today, it's 5,623. So we're up over the last month 1%. But if you would have sold during that time, you would have missed out on 10% of the earnings.
So, and I said this on the TV program we go on for Premiere the other day. I said, if you recently sold because of the volatility, you made a mistake.
Well, and you know what
there's no way that's not a mistake. You made a short-term decision when you should, and when investors make long-term good decisions.
And guess
it's
what?
a mistake.
They're not back in the market. They're waiting for the next pullback now because they've lost 10%.
Right. Psychologically, no one gets back in after it goes back up 10%.
The opportunity cost for that person was they're out of the market now at an 8% loss, let's call it, right? Well, now they missed 10% on the way back up, so it's an 18% opportunity cost. That's a huge mistake, and yeah, that's what's interesting. All these people think they can do it themselves. Yep, you can get an outcome. Is it an optimal outcome? I don't know. They see financial advisors as expensive. Well, if they protect you from that one mistake, they paid for their fee likely for 18 years.
Oh, for sure.
It's so simple to break down for people.
So you remember I was using the line, when people are panic selling, you should be panic buying.
I saw that on a post on Bloomberg. People are panic buying.
Oh, you saw it on Bloomberg?
Yeah.
Oh, they must have heard me say it on
off
WMT radio. I'm sure they ripped it off me. But anyway, I got a funny story about that. So someone asked me, well, did you do any panic buying? And it was like an aha moment for me, because I was like, that's a really good question. But actually, I said, no, I don't have extra cash right now. I'm just, because the way I do it, I'm invested all the time. So it's pretty rare that I would have just extra cash. And I'm not going to use my emergency fund to dip buy in the stock market.
You actually did panic buy and didn't know it.
Well, my systematics did.
Yeah, because do you know what day the 401k gets deposited? It's about the 5th of the month.
Oh, is it?
Yeah, it's the 5th or 6th. There's
I actually thought I missed it because of our pay period.
So that's a good. So I do our systematic through the 401k, right? But then I do weekly systematics, and I typically invest the money on the 1st.
Oh yeah, you probably weren't feeling good on the 5th.
It was down like 10% in the first 3 days.
Did you buy more?
No, because it's not part of my systematic. It doesn't matter.
Yeah.
But gotcha. I don't check it. Like, I just knew, that was fun. I think that's just really interesting, and I don't know how we got sidetracked there from the original content and talking about keeping up with the Joneses, but maybe people are just asking the wrong money questions.
Yeah, what are the wrong money questions?
Well, I think some of the questions people ask are, should I buy this? Right now, there's certain metals hitting all-time highs, and people are saying, should I buy this? Or should I buy this sector? Should I buy it? And I don't think that's what people should ask. It shouldn't be, should I buy gold ETF? Should I buy Bitcoin or any of this stuff? That's not what it should be. The questions that people should ask themselves is, one, what defines financial success for you?
Ooh. Very nice question.
Well, because once you start to define what has to happen for you to feel happy, that'll help define the investments. Because if all you're saying is, I just want the best performance, that'll never feel good even if you get it. Because there wasn't a reason you did it. There's not an objective to the investing. It's one of the reasons we utilize that bucket strategy. Why? We're giving responsibilities to our money, and we know what it should be. Some other questions people should ask versus what I should buy. What keeps you up at night? If there's an investment that keeps you up at night, why do you own it?
Well, it might do good.
That's not, but it's, maybe. But what if it doesn't? Then you're going to be doubly upset. Like, just get it out of your world.
It's causing you to have uncomfort in your life.
Okay. Elias, you know me pretty well, and you know that I'm always kind of looking at the next thing, right? Like, there's always something in my life that I'm doing next, whether it's business or personal or whatever. And what I've done the last couple of years, I've been able to like check the boxes of some things that I can take out of my mental world. And it's allowed me to do things much more efficiently. I think that should be the way with investments. So people are thinking about some investment all the time and you're nervous, just do something different. You should get it out of your world. It's taking up too much brain capacity.
That's pretty simple advice.
The other thing people should ask is this, and I think people miss this when they're investing, is this short-term money or long-term money?
I think that's one of the biggest misses for investors. I think investors would fix 80% of their mistakes by answering that basic question. Is this money here short-term or long-term money?
And then number 2, am I a trader or an investor?
There you go.
If you say you're an investor, then buying and selling should be eliminated from your thought equation. Another question I think people should ask themselves when they're saving money or allocating money to is, are you saving for tomorrow or do you need to live for today? Not everything has to be for 30 years down the road. And I think the longer we evolve in the financial planning world and doing plans, especially for younger people, I think one of the things that actually happens is we help guide them as to this is what you need to do to hit your retirement goals. If there's extra, you can live today. And I think that's hard for people to, I think it's really hard for people to figure out if they haven't done a plan. They don't know, they really don't know how much they need to save, which lends them to just living for today and using the thing, well, you know, YOLO, you only live once. Well, that's true.
To me, that's one of the more valuable things we do for our younger, really good super savers, we would call them, is, which I don't want anyone to take this as me saying you can save too much money. Like, I don't think you can save too much, but I think there is a lot of value when families understand the targets they need to have to hit their long-term goals. So then it's almost like a permission slip to then have some more lifestyle too. I think one thing a lot of the successful young investors have in common when they come to work with us is they are being so responsible with their money that they're missing out on some other things in life. And then through our process, we show them how well they're doing, what it potentially could mean for them. And then here's like here's basically the bottom line of what you need to continue. So then they don't feel bad when they go to upgrade their home or get a new car, where before a professional's really walked them through that, I think they feel bad about spending money. So in a way, it's almost kind of a permission slip to have some more lifestyle and enjoy some of your money, which I tell them all the time. If you're checking all the boxes, why would you stop yourself from going on vacation, having the vehicles you want, live in the neighborhood you want to live in, have the type of house you want?
How many articles a day do you read?
It probably fluctuates. Maybe at most 10, probably the minimum 3.
Okay, I think I'm probably 15-ish a day, roughly, because that's when I get up in the morning to just skim through. And I don't always read them thoroughly. Like, I'll skim the article, figure out if I really want to delve into it, just to process more information. But some of the people that write these articles, I question whether they know anything about money.
Oh, all the time.
Can I tell you why?
Well, I think they know some stuff about money. A lot of times I don't feel like they've ever helped they've never sat across the table from a family and actually helped them with their money, which is different.
The title of this article I was reading the other day, most households can weather a $400 financial shock. Is $400 in today's world a financial shock? Isn't that like a weekly grocery bill?
What does that even mean? $400.
It says research finds, but some have to get creative. $400 is not. If you can't come up with $400,
I think if you're getting creative
to
over $400, you're probably not coming to Premier for advice.
Well,
but okay.
I was just reading this. I'm like, this is crazy. Like, these people, $400 now is not what it used to be. I mean, if you have a family, what's your weekly grocery bill? You went one time.
I bet it's $200 to $300 every week.
So 400 is not a financial shock, but the fact that they publish this thing, and I think it just goes to some of the stuff you
what
read.
Is it, 1930?
No, it was published August 19th, 2024. Yeah, I think, and I've noticed this recently in the media. There was a gal who posted an article on Bloomberg. And it says S&P 500 on verge of correction. Well, that was August, 5th. That stayed up on Bloomberg News it might still be there for like 3 weeks as the S&P blew right by it. Then the lady posted a week later another article completely the opposite. How confused are investors if they're reading these articles like we do?
They're very confused. Well, you can tell by I still, even just yesterday, I was getting questions about the market being down in a meeting with people, right? Where
That's all-time highs.
if you're not looking at the following the market and you just look at headlines, you might actually believe that the market is still in a correction and still going down, which is the exact opposite would be true.
I just want to bring that up because I think people are similar to me, especially with, if you have an iPhone, you have all the Apple news there, and mine's kind of targeted towards financial data or financial news. So I see it all. And some of this stuff I open up, I'm like, you've got to be kidding me. If you can't weather a $400 financial shock, you need to reassess what you're doing. Like, that's not a shock. That's like you tripped over your shoelace.
I don't even have anything else to say about it.
I just couldn't believe it. And I read through the article. It said cash is still the preferred method.
To pay for a $400 item?
Yeah.
I would hope so.
Preferred? It's the only way.
I wonder how old the person was who wrote that.
She's not. She's young. But she's a personal finance expert.
Oh, she is?
She claims to be.
See, that's just it, dude. Anyone can go on the internet. Anyone can go on the internet and claim that they're anything. Here's a good example, and I've used this with people before. If I go buy a truck and I put a toolbox in the back and I put a ladder rack in the back and I hang some ladders, am I a contractor now? I can put a phone number on the side of the truck and tell people I'm a contractor now. Does it mean I know what I'm doing? It doesn't.
It's kind of like being a pro fisherman. Go spend $110,000 on the boat, $70,000 on a truck, a bunch of fancy stickers, get yourself a jersey.
Now you're a professional fisherman.
Pay $10,000 to get in a tournament. I'm a pro. Maybe, but probably not. With that said, I enjoyed the show today. I hope your kids enjoy getting back to school. If anybody is out there looking for help with their financial plan, you can go to btwellshow.com. If you haven't yet, follow us on social media. LinkedIn, Facebook, X. I think we're now on Instagram. Premier Investors on Instagram now. So
on Instagram, doing reels
as well. So that said, I want to thank everybody for listening and hope to catch you next week.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments and Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.